Well, welcome again. We have Dr. Arthur Carvalho from Miami University. He is an assistant professor of information systems and analytics from the Farmer School of Business there. And he is one of the first professors to put together blockchain courses at the undergraduate level. And we are very excited. I know very little about blockchain, as I've already shared with him. And so hopefully we will all know a lot more at the end of this. And as we said before, feel free to ask questions along the way. All right, Dr. Carvalho, it's over to you.
Perfect. Thank you so very much, Wendy, for the invitation. And hi, everyone. I'm going to start sharing my screen with all of you now. And you should be able to see my slides now. Perfect. Is everything fine? Can everyone see my slides perfectly?
Yeah.
Awesome. All right. So again, thank you so much for the invitation, Wendy. My name is Arthur Carvalho. A few things about myself before we start our discussion on Bitcoin and cryptocurrencies. I work, as Wendy said, at Miami University in Oxford, Ohio. I'm an assistant professor in information systems and analytics. So I usually say that we are the computer science guys or the nerds and the data scientists inside the business school. Okay, my second title is I'm the Dinesh and Paliwal Innovation Chair inside the business school. I have been involved with blockchain and cryptocurrencies for 7, maybe 8 years right now. So it has been quite a few years because the space is relatively new. Within that space, I work as an advisor. I work in the advisory board of some startups. I'm an advisor to Miami University Blockchain Club. So we have a very nice club here. More than 200 kids actually participate in that club. So it's a massive club. I teach blockchain and business applications at Miami University. As Wendy said, that was one of the first blockchain courses developed in the nation, in the US. And I have a bunch of research stuff, papers published on applications, governance of blockchain, and adoption of blockchain. Okay. So my primary goal today will be, of course, educational. So try to explain as well as I can in a gentle way, that's the title of my presentation, in a very high level way, what Bitcoin is. At the same time, I want to explain as much as I can without going into the technical details, some of the issues that Bitcoin faces today. For example, we usually say that Bitcoin faces KYC and AML problems. You will see throughout the presentations, we have tons of terms, very common in the field, but I'm going to introduce all of them. Okay, so KYC, know your customer. Why? All the way back to 2001, 9/11, of course, horrendous thing happened here in the US. What happened immediately was the Patriot Act. As part of the Patriot Act, we had a bunch of new regulations that banks have to comply with. One of them is KYC, know your customer. So if you go to a bank today and ask for a mortgage or checking account, saving account, the bank will ask you for your name, social security number, address, a bunch of other informations because the bank needs to know who you are. So Bitcoin has serious issues with KYC. It fails completely. Another one, AML, anti-money laundering. So money laundering is easy to understand. We take money from illegal sources like selling drugs, and we try to make that money legal somehow within the banking system. Bitcoin struggles tremendously to comply with anti-money laundering policies. So again, we will explain the reason why very soon. Another question I usually get is, what's with the energy, the electricity consumption of Bitcoin? Right now, I can tell you that Bitcoin consumes more electricity than the Philippines or Peru. Or actually, if you take Peru and Hong Kong together, Bitcoin consumes more electricity than these two countries together. So why? We will understand very soon. Another one, Bitcoin is decentralized. There is no bank. I can send you Bitcoins, you can send me back without anyone in between us. There is no bank, no Visa, no MasterCard, no one intermediating that transaction. So that's what we call decentralization. Bitcoin is highly decentralized in nature. I'm going to explain that again. And finally, the question, perhaps the number one, how can I buy Bitcoins? Again, I don't necessarily have $60,000 to buy one Bitcoin. How can I buy a fraction of one Bitcoin? I will have some demonstrations by the end of our talk today, explaining how you can use some American services, highly reliable services, to have some, perhaps some small purchases when it comes to cryptocurrencies. So the agenda today, that's how I'm going to proceed today. I'm going to spend a few minutes talking about history. What's the context when Bitcoin was created and why it was created? Then after history, we kind of move towards technology. So we try to understand how Bitcoin works, but again, in a gentle way without discussing the nitty-gritty details. Then the third step will be the use case. Where is Bitcoin being used today? There have been like tremendous advances here in 2021. So we have some interesting use cases for Bitcoin. And at the end of my presentation, that's the money talk part of the presentation, when I discuss how to have some exposure, how to buy Bitcoins in case anyone is interested in. So this box is, the length of this box is kind of more or less represent the amount of time I'm going to spend in each one of these specific topics. So as I mentioned to Wendy in the very beginning, feel absolutely free to ask questions as we go. So if there's something you don't understand, something you want me to repeat, just put here in the chat. I'll be looking here to my right side, look at the chat here, or raise your hand, or just interrupt me, unmute yourself and ask question. It's perfectly fine with me. All right, so traditional disclaimer here. Whatever I say in this presentation today does not, and it's not intended to constitute legal or financial advice. And whatever I say here represents Arthur, not Pharma School of Business, Miami University, or Dinesh and Ayla Paliwal, who sponsor my professorship. All right, so that said, let's talk about history now. Bitcoin was proposed in 2008/2009. So what was going on there? Financial crisis. Huge, massive crisis caused primarily by banks mismanaging our money and mortgage. So at that point in time, Bitcoin was released by a person or an entity. We don't really know who that person is. Nobody knows, called Satoshi Nakamoto. And that's very interesting because, again, the person proposed this revolutionary concept, and that person is completely anonymous. Nobody knows who this person is. Some people even say it's not a person, it's actually one entire organization. But again, we just don't know who that person is. But we know that Satoshi Nakamoto was part of a movement in the 1990s. That movement was called the cypherpunks. So who are these guys? So the cypherpunks, a bunch of people who usually used to get together and talk to each other using mailing lists. At that point in time, emails, as we know today, was not really a thing. We used to have this forum, like ugly looking forum, where people would exchange information. And that was a platform. It's primarily a platform for people concerned about online privacy. So look at that time again, it's 1990s. And already at that point in time, people were discussing privacy. Do we have privacy online? So the common theme here was we can have secure communications by using something called cryptography. This whole branch of mathematics called cryptography, we can use some techniques there to actually secure our communications. And there was a very strong libertarian inclination. So if you look at the posts there, people talk about freedom above pretty much anything else. So they want to defend freedom, they want to defend privacy by pretty much all means. So this movement, the cypherpunks, they became incredibly popular after an article in a magazine called Wired. So Wired, a very popular technology magazine, published in 1993 an article called The Crypto Rebels. That's how that article describes the cypherpunks movement. So the people in this room, they hope for a world where my informational footprints or anyone's informational footprints, every single thing that we do, from an opinion on abortion to the medical records of an actual abortion, pretty much every single thing can be traced back to that individual only if that individual chooses to, wants to. So there is only one way that this vision can ever become true, that is by the use of cryptography. So again, this group, they defend freedom and privacy pretty much above anything else. So whatever I do online or offline, it's my business. And you only know about that if I want you to know. So that's the main philosophy of the cypherpunks. Within this context, that's where Bitcoin was born. So the idea here is, can we have a currency, money, that is digital, completely online, and decentralized? What does that mean? It means there is no central authority that controls money. Right now in the US and pretty much any country I'm familiar with, we do have central authorities that pretty much have monopoly over money. For example, in the US, it's the government. We have the US Treasury that prints money, the Federal Reserve banks that control the flow of money. And we also have regulations that make mandatory for banks to report on our financial transactions back to the government. So the idea here was, can we create our own currency that's not controlled by anyone, just the technology, and that is decentralized in a sense that no government can actually have full control of that specific currency? So that is the context of Bitcoin. At that point, Bitcoin was born, and now it's time to talk about Bitcoin. So what is Bitcoin? Number one, Bitcoin is an online currency. It's money that is online. What does that mean? That sounds crazy. But if you turn off all the computers on Earth, Bitcoin dies, because you will never touch on a Bitcoin, ever. It's purely virtual. It's purely online. You can touch on $1. You can touch on gold. You cannot touch on Bitcoin, because it's, again, purely virtual currency. And I'm highlighting the word currency here because some people will say that, well, Bitcoin is not really currency. Bitcoin is an asset. Other people will say that Bitcoin is actually property, is a commodity. So again, there's a bunch of discussion on what Bitcoin is, but for now, let's assume that it is currency. It is money that we can use to intermediate transactions. If you want to sell me something, I want to buy that thing, I can use Bitcoin to, technically speaking, perform the transaction. All right? Now, it's online currency. There are some properties of Bitcoin now that make Bitcoin very special. Number one, we call Bitcoin a cryptocurrency. Why crypto? Because it heavily relies on cryptocurrencies, or in this case, cryptography. So Bitcoin is a cryptocurrency because it heavily relies on cryptography to make it safe. I'm going to explain this point again very soon. So whenever you hear the word cryptocurrency, it's an online money that relies on cryptography. Point number two, Bitcoin is anonymous. There is no need for any identification whatsoever to transact using Bitcoins. That's scary, and I'm going to explain why very soon. But in a nutshell, I can send Bitcoins to any of you without knowing who you were, where you were. That's terrifying. I'm going to explain why very soon in terms of safety and security. Perhaps the most interesting one is that Bitcoin is decentralized. Again, there is no central authority. There's no central bank. There's no Federal Reserve banks here that control the supply of money. There's no treasury departments to print money. Every single thing is dictated by the technology. Okay, I'm going to explain this very soon how that actually works. Okay, so again, just for now, I'm going to ask you to keep in mind that Bitcoin is money. It's kind of a crazy money that only exists online, but let's go with that perspective. So if it is money, well, technically speaking, I can send money to any of you. I can send Bitcoin to Wendy, to Lucy, to any one of you. But the question now is, if we don't have banks, where is that transaction stored? Where do we store information about Arthur sending 1 Bitcoin to Wendy? That has to be stored somewhere. And that's what I'm going to explain next. So there's a little bit discussion on the technology now. I'm going to introduce some important concepts so that we can have that discussion a little bit more clear. But the discussions the concepts I'm going to introduce now, the number one will be the idea of nodes. Nodes will be just computers. Thinking about a bunch of computers, the technical term that we use here will be nodes. So the nodes here for us will be a bunch of computers like I have in my screen. All the transactions that we have in Bitcoins will be stored by these computers, by these nodes. Okay? Collectively, we call these nodes a blockchain network. It's a computer network. I'm going to explain what blockchain is very soon. But again, think about all our computers put together, they form a network. That network of computers we call blockchain network. Definition number 2 that we will use very soon. We have users like you and me. If I send money, let's say Bitcoin again to Wendy, I'm going to be a user. Wendy is going to be another one. We are using the blockchain network. So all the transactions we have, all that information will be inside that specific network right here. Okay, so let me make things a little bit more concrete now. Up to now, I want you to remember a few definitions. Number 1, the definition of user. These are like the end users, like you and me. It could be like computers, it could be like robots, sensors. But to make our conversation simpler, let's assume that users are like humans, like you and me. Whenever we transact in Bitcoin, that information will be in a ledger stored by the blockchain network. So now let's try to understand what this blockchain network is. Okay. Now, number 1, and that's where things get really weird. The blockchain network is public. What does that mean? It means that you can join the network whenever you want to. I show in class, it takes 6 clicks for my computer to join that network. Now, let's pause here and think about the consequences. If every single one of us, if we can join the network with our computers, and if I'm telling you that all the transactions will be stored in that network, does that mean that everybody has access to our transactions, financial transactions? And the answer is yes, that's true. If I send Wendy 1 Bitcoin, every single person on earth can see that transaction because anyone can join the blockchain network and store that transaction. But that's a problem now, because if I go to Walmart, if I buy something and pay with my credit card, I don't really want people to see my transaction. When it happened, the amount of money I paid, I need privacy. So what Bitcoin does is it replaces privacy with anonymity. And that's the problems now. The problems I mentioned before, KYC, AML, they begin now. So that's how it works. I'm going to send money to Wendy again. I'm going to come back to this example over and over again. So I don't need to know who you are, where you live, your name, your social security number. The only thing I need to know is your identifier, within the system. That's all what I need to know. You could be in the US, you could be in North Korea, you could be in Japan, you could be in Brazil. It doesn't matter where. I only need your ID. With that ID, I can send you Bitcoins. But now we have problems. The problems here are KYC, know your customer. So what happens if instead of Arthur and Wendy, we have person X sending money to ISIS, Al-Qaeda, evil organizations, terrorists? We cannot really know this because it's X sending money to Y. We don't have information who X is or who Y is. Even though we can see that X sent money to Y, we don't know who these guys are. That's the problem here. A massive, huge problem that traditional banking systems don't necessarily have because they can identify sender and receiver. AML is the same here as well. Money laundering with Bitcoin, piece of cake. If you remember like Hollywood movies, like action movies, you see the bad guys coming with a truck full of drugs. And you see the other bad guys buying the drugs with bags full of cash. Why do they use cash? Because you cannot really trace cash. They will never use American Express, of course, to pay for drugs because the information will be in the financial system. So they use cash. But now cash is horrendous because you need these bags and bags of money. What about Bitcoin? You can pay for your truck of drugs, having this Bitcoin transaction. Nobody knows who you are, who the receiver is, and nobody knows about the transaction. They only see a bunch of random letters sending money to random letters without knowing who these random letters are. Issues with AML, anti-money laundering. Okay? So the issues begin here, but let's proceed. Let's try to understand things a little bit better here. Let's make one example, very concrete example now. Let's say we have two users, like two humans. Again, I'm going to use example of Arthur and Wendy again. Arthur is right here on one side. Wendy is on the other side. I don't know your name. I don't really know where you live. I don't know your social security number, nothing about you. The only thing I need to know is your ID in the blockchain network. Okay, that's the only information I need. Now, I'm going to create a transaction. What is that transaction? That transaction is like Arthur sends Wendy 1 Bitcoin or 0.1 Bitcoin, whatever it is. How does that transaction look like? That transaction would look like what I have in my screen. So from, that's my address, to, that's Wendy's address. The amount of money, let's say 1 Bitcoin, and now we have some cryptographic stuff here called the digital signature to make sure that the sender is who he says he is. I'm not going to technical details here about digital signatures, but that's where the cryptographic stuff comes into play. So you can see here, I'm sending money to any of you. I don't really need to know who you are, where you live, social security number, bank account number. All what I need is your ID. How can you get this ID? It takes like 5 or 6 clicks. Very easily, very quickly, you can generate one of these IDs without having to go to a bank, without having to open accounts anywhere. You can do it online. Anyone can do anywhere on earth. All right? Now, moving on. We have the transactions. I'm going to create a transaction in my computer using specialized software. I'm going to send that transaction now to one of these computers in the blockchain network. Let's understand what happens next. What happens when these computers receive the transaction? How is that transaction processed? Now, that's going to be the most strange stuff in my whole presentation. It almost looks like science fiction, but that's how it actually works. We have 4 steps. Okay, just remember, we have to process that transaction. If it was a bank, that would be a piece of cake. The bank gets a transaction, check the balance. If the balance is greater than the amount of money you are sending to the other person, update the balance, decrease a little bit there, and increase the balance of Wendy. Piece of cake. The bank can do that very efficiently. But here, there's no centralization. There's no bank. So how does that work? 4 steps. Okay, each one will be more strange than the other one. It's going to be, again, almost like science fiction. But that's how the technology works. Step number 1, the computers here, they will be collecting these transactions. And they put transactions inside blocks. Why? When you go to Walmart and you pay with your Visa, it takes about 5 seconds for your transaction to be processed. It's like, pass the card there, then wait a little bit longer, 5 seconds, transaction approved. Here, it's not necessarily the case. When we get transactions, these nodes, they will not really process transactions immediately. They put these transactions in a pool of transactions. They create a block of transactions. Why? Because we have some theoretical reasons. From computer science, we know that if you have a system that is distributed like a blockchain network, if you process batches of transactions instead of individual transactions, you can increase the number of transactions per second. So that is the analogy that I use. If I have students in my class, one student at a time, giving me one assignment, and I grade the assignment and give back to the student. The next one, give me the assignment, grade the assignment, give back to the student. That's going to take me a long time. So instead of taking one at a time, I take a batch or block of assignments, grade all of them, return back to all the students. That's more efficient than grade, stop, grade, stop, grade, stop, and so on. The same idea is true here. That's why we have blocks instead of single transactions. Now we have a bunch of problems now, really a lot of problems. One problem is this computer right here can be in Oxford, Ohio. This computer right here can be in India. This one can be in Japan. This one can be Brazil, South Korea. This one can be all the way outside Earth in space. Actually have nodes in space now, believe it or not. So the question now is, well, all these nodes will have blocks. These blocks will not necessarily be the same. So people here close to Oxford will very likely send their transactions to the computer close to them. People in Japan will send transactions to the computer close to them. But now we have these different blocks. Which block are we going to process next? We have to find consensus somehow. These computers, they have to reach consensus. Why? If we do not reach consensus, I have the double spending problem. How does that work? I can come to one computer right here and say, hey, I'm going to send 1 Bitcoin to Wendy. Go to another computer and say, hey, I'm going to send 1 Bitcoin to Lucy. The same Bitcoin. So I spend the same Bitcoin twice. 1 to Wendy and 1 to Lucy, just by sending this Bitcoin to different computers. So these computers cannot really process their blocks in isolation. They have to collectively say, let's process only 1 block, and then we prevent Arthur from sending this transaction to 2 different blocks and having these 2 transactions processed. It sounds strange, but in a nutshell, they have to build consensus. They have to collectively come together and say, that is the block of transactions that will be processed. Now, how does that work? If you understand how it works, you will understand the issues with electricity consumption in Bitcoin. Okay, so Bitcoin uses a mechanism called proof of work. Okay, so proof of work will define pretty much who is going to be selected to propose a block. Okay, so let me try to explain that without getting to the mathematics here. Okay, just remember, for now, I want you to remember one thing. Every single one of these computers will have a different block. Every single block will have different transactions. One of these transactions can be Arthur sends money to Wendy. Another one can be person X sends money to Lucy. Again, which block we will process first? Let's reach consensus. So from every single one of the blocks, these computers in isolation, they will derive one puzzle. And that's crazy. But the idea here is, from my block, I can derive a computational problem, a problem that is linked to that only block. Okay, there are a bunch of mathematics here, a bunch of cryptographic stuff, but in a nutshell, we can derive problems from our blocks. Now we have these problems. How do we solve that problem? Whoever solves your problem first will be able to come forward and propose the block. Now we have a competition. We have all these computers competing against each other. Let's see who solved the problem first. Whoever solves that problem first will tell the others, drop your block and process mine. All right? Now, that explains the issue with Bitcoin, because you have all these computers competing against each other. And to make things even worse here, there's no shortcut. To find the answer to the puzzle related to your block, you have to guess. So you can think about me writing something now in a piece of paper and asking you, can you guess what's written here? Well, you have no idea. You have to keep guessing and guessing and guessing and guessing and guessing until you get it right. There's no shortcut. Now think about all these computers all over the world trying to solve their problems at the same time. What's the problem? Electricity consumption. We have all these thousands and thousands and thousands of computers all over the world. Each one of them, they want to be the chosen one to propose a block, but now they keep running and trying to guess their answer for their own problems, to be the first one and be able to propose a block. Why do they want to be the first one? I'm going to explain that very soon. You can literally make $400,000 if you are the first one. That's why. I'm going to explain that in a second. Now we go to step number 3. Again, we have the transaction. It goes to a computer put in a block. All these computers have different blocks. We have a competition going on. Who is the first one to solve the problem related to that block? Now we go to step number 3. Step number 3 says, well, let's verify now whoever is selected to propose a block. All the other computers will not necessarily trust the winner. They will verify if the solution to the proposed problem is actually true. Now, you can think about Sudoku now. Finding the solution is hard. Verifying is easy. Now, if the block is good, we link that block to previous blocks of transactions. And that happens every 10 minutes. All the process I described here, every 10 minutes, it happens over and over again. So now we have a chain of blocks or a blockchain. I know it's a lot of science fiction. Let's take a deep breath now. If you lost me, it's time now to wrap up. Summarize now. So now is the time for you to catch up with me here. Brief summary, that's how blockchain works. Let's say Art is going to send Wendy some money, 1 Bitcoin. I'm going to create a transaction using some software that we call wallets. Okay? Where do I send that transaction to? To one of the nodes. We have nodes all over the world. But these nodes, they have different blocks of transactions. Now we have to pick only one block to process, to find consensus. Now let's select one of these nodes to be the winner. Now that winner will propose a block, and the other ones will drop their block, verify the block of the winner, and if the block of the winner is good, they append that block to a chain of blocks. Now we have a blockchain. It's absolutely science fiction. I know it's crazy stuff, but that's how it works. So what are the benefits? So let's go back to Earth now and explain what's the benefits of running all this crazy stuff. And I know it sounds crazy when I talk about the mathematics in class, half of my students sleep. It's like, because it gets even more complex and crazier. Okay, so what's the point here? I mean, what's in it for me? If I want to run a node, be one of these computers here, I'm going to spend a lot of electricity. trying to be the winner in one of these competitions and propose a block. But why? That's the reason why. Whoever proposes a block can print money, can print Bitcoin out of thin air. That's how money gets into the system. Just remember, there is no treasury here to print money. There is no central bank to control the flow of money. So how does money get into the system? We have these competitions every 10 minutes to process transactions and propose blocks. Whoever gets to propose a block can print money. So a block has many transactions. The first transaction will be nobody sends me money, a certain amount of money. And that's how money gets into the system. If you are the winner, you get to print money. You can see how money gets into the system. It's completely dictated by technology. It happens every 10 minutes on average. So no one, no entity can go to Bitcoin now and say, print money right now. That does not really happen. It's dictated by the technology. It's deterministic. It happens every 10 minutes. We have these blocks and money being printed. Okay? I have one question in the chat here. Do other cryptocurrencies use blockchain tech too? Yes, pretty much all the ones I'm familiar with use blockchain. However, the consensus mechanism can change. Some of them use proof of work, like Bitcoin. Dogecoin is very similar to Bitcoin. Others use something called proof of stake. It's a different way of reaching consensus. So in a nutshell, yes, blockchain is in all of them, but the consensus mechanism to select who is going to propose a block differ between these technologies. Now, for those of you thinking like, okay, I want to make some money, so I can put my computer now to be a node, how can I make money? And I'm sorry to tell you, but you cannot really. I mean, unless you buy incredibly powerful computers. Remember that competition, who can be the first one? You will never win that competition. With my computer here, my laptop beside me, if you have a commodity computer at home, there's absolutely no way. So the computers that people use these days that we call miners, they are incredibly sophisticated and very expensive. So because again, they want to be the first one to win that challenge. And now you can see when we have thousands and thousands and thousands of computers at the same time, just trying to be the first one to propose a block, you can imagine the amount of electricity that it is consumed. So that's the problem of Bitcoin in terms of electricity consumption. Just to throw in a number at you in terms of consumption, right now, about 0.5% of the entire world consumption of electricity is by Bitcoin. So it's half of 1%, it's just the Bitcoin, just doing these mining operations there. All right, so very interesting question from Wendy here. What happens to the other blocks of transactions that are not part of the winning block? They continue to be in a pool of transactions. So these blocks are processed every 10 minutes. If a transaction is not really processed right now, maybe the next 10 minutes it will be processed, it will be in a block. If not, maybe in the next 10 minutes. And the crazy thing is, Wendy, there is no guarantee that the transaction will ever be processed. And that's the crazy stuff. I'm going to explain how you can actually get it processed very quick in a second. But technically speaking, it depends on these nodes to take a transaction and put in a block, and that block being accepted. So yeah, that's another crazy stuff here amongst all these crazy things. There's an interesting question here. I heard that Bitcoin is banned in China. Do you know if that has something to do with the tech or desire to control things? Definitely 100% desire to control things. So one of the potential issues happening in China is releasing its own cryptocurrency. We call CBDC, Central Bank Digital Currency. So China is going to release its own very soon, its online money very soon. And of course, it does not really want or need competition there. So an easy way of getting rid of competition, at least in China, is let's ban all the cryptocurrencies now. And I have, again, monopoly over money. And I have only my cryptocurrency here in this space. Okay, so that's one of the reasons why China is pretty much banning cryptocurrencies. It has nothing to do with electricity consumption. It has nothing to do with some other illegal stuff. It's primarily having monopoly because they are about to release their own cryptocurrency that's controlled by the state. But that's an excellent question. All right, so moving on. How much money can I make? Now, that's the eyebrow-raising figures here. It happens every 10 minutes. If you are the winner, you can print out of thin air 6.25 Bitcoins right now. How much money is that? $360,000. So now you understand why we have these people all over the world in this kind of crazy competitions to be the first ones to propose block, because when you do, you make $360,000 immediately, like immediately. And it happens every 10 minutes. An interesting point here about Bitcoin is money, the amount of money you can print is half every 4 years. So right now it's 6.25. About 2 or 3 years from now, it's going to be 3.125. It keeps going. But the question now is, if we keep halving there all the time, it eventually ends, right? So if you keep dividing by 2 all over and over again, eventually we have to get close to 0. And yes, that's going to happen in 2140, many years from now, more than 100 years. At that point in time, we will have a total of 21 million Bitcoins in circulation. And that's one of the features of Bitcoins. You will ever in the history have only 21 million Bitcoins. Nobody will be able to print 22, 19, because when it's 21, it's over. The technology will not really allow you to keep going and print more money. But the question now is, what will be the incentives at that point in time for the nodes to keep having this competition? Because they cannot print money anymore. So now, transaction fees. Now, going back to your excellent question, Wendy, some transactions will not necessarily be processed immediately, but how can we make them appealing to be processed very quickly? We can pay transaction fees. That's the second way that these nodes can make money inside Bitcoin. First one, they can print money out of thin air. Second one, they can collect transaction fees. So what's a transaction fee? If I want to send 1 Bitcoin to Wendy, and I say in my transaction, I'm going to send you 1 Bitcoin, but I end up sending 1.1. So what do we do with the 0.1? These are like the tip or the transaction fees that we pay. So the higher this tip or transaction fee, the more appealing our transaction is to a node, because that node will receive more money. So that's the second way that nodes can actually make money, by just collecting these transaction fees. Okay, so let's now kind of wrap up here and move away from technology and talk about use cases. So the nerd part is over. Let's go back now to understand how it is applied, how people are using this technology today, and how can we actually buy Bitcoins in case anyone is interested. To wrap up here, I want you to pay attention to a few important points. Number one, these nodes are the computers that keep the infrastructure. They belong to everyone and no one at the same time. There's no central bank or banks who owns all the computers in the network. So any one of us, we could be a node. And these nodes, they have incentives to keep the network alive. They have incentives to spend electricity because they can make a lot of money. when they become a block proposal. Number two, the amount of money in circulation is dictated by the technology. There is no central authority. Right now in the United States, not the United States, but on Earth, we are facing a tremendous crisis because of COVID-19. Tremendous, of course, not only social and healthcare crisis, but also economical crisis as well. So what governments are doing now is printing money, printing more and more and more money to help people who need help. But now that does not really happen inside Bitcoin. No one can just randomly print money when they want to. That's dictated by the technology. It only happens every 10 minutes on average when we have these block competitions, all this kind of who is going to be the first one to propose a block. Last one, all the information about who wants what is stored inside blocks. And any one of us can have access to that information. So it's not that central authorities control the data is controlled by everyone who wants to. And of course, to avoid privacy issues here, we replace privacy with anonymity, which is one of the problems of Bitcoin. Right? So that is the technology part. If you fell asleep now, let's go to interesting stuff. Time to wake up now and talk about use cases. Let's leave the nerd stuff and let's get to the social things now. How is Bitcoin used? What is the purpose of Bitcoin today? So I had one very interesting workshop about 2 weeks ago with a bank, and one of these managers, one of the higher ups in that bank, asked me, Arthur, I'm so happy with my credit card. I mean, why on earth do I need Bitcoin right now? What's the purpose for me? And I guess my answer was shocking because I told him, you don't really need Bitcoin unless you want to speculate and try to make money. Why on earth do you need Bitcoin right now? So, but there are use cases where under certain conditions, in certain situations, people need Bitcoin. So let me explain a few of them. Case number one, El Salvador. That was, in my view, the most shocking piece of news in 2021 when it comes to cryptocurrencies. And trust me, there are many shocking news in this field. El Salvador came forward and said, in June, from June on, Bitcoin is a legal currency in El Salvador, which is crazy because now they don't have control over the currency, but it's legal tender. You can, technically speaking, go into McDonald's there, buy a burger, and pay in Bitcoins. That's legal. But the question now is why? I mean, why do we have that in El Salvador? Number one, 24% of El Salvador GDP comes from personal remittances, like people in the US, Europe, other places sending money back to the country. That's close to a quarter. Think about a quarter of what's produced, of what's valuable in the United States. Think about that coming from other countries. Donations. That's pretty much what happens in El Salvador. But the problem is when you use Western Union or other services to actually send money to El Salvador, you pay hefty fees, very expensive fees. So now by using Bitcoin, what the government hopes here is to reduce these fees, to have much less or much lower fees here so that people in El Salvador can get more of the money that's donated to them. Point number two, why? It could be shocking to some of you, but El Salvador has no currency on its own. The legal currency there is the US dollar, believe it or not. The US dollar is the legal currency in El Salvador, in Panama, and a few other countries. What's the problem here? The problem is whatever we do in the States, that can impact El Salvador. Again, let's go back to COVID. We are printing money, helping people who need help, but now we have a higher inflow of money. As a consequence, we have inflation. Now, that part of that money will end up going to El Salvador too, which means we will have inflation too. just because of the monetary policies we have in the US that can affect them as well in El Salvador. So by using Bitcoin, maybe you kind of protect yourself a little bit from monetary policies in the US. Third one, alternative to bank accounts. Just remember, we live in my view, the most amazing country in the history of humankind. We can have access to banks very easily. We can get checking accounts, saving accounts very easily. That's not a reality of people in other countries. Like in El Salvador, this is from Forbes, this magazine Forbes. If you look at the 40% of the population, the 40% of the poorest people in El Salvador, 6% of them have bank accounts. Let that sink in for a second. 6% of the 40% of the poorest ones. So they don't have access to banks. How do they get paid? How do they transact with each other? It's insane. So the idea is, using Bitcoin, we don't need physical banks in these rural places. We only need devices that can connect to the internet, and now we can replace bank accounts with Bitcoin wallets. So what's the catch here? These devices, right? If you think about a place that has no banks, how can we assume that they have smartphones? We cannot. So that's the problem with using Bitcoin in El Salvador, some nations in Africa as well. People don't necessarily have these computational devices to use Bitcoin. Case number 2, store of value. So let's go back to the inflation discussion. Okay? There's this kind of argument, which I personally don't buy, but there's this argument that Bitcoin is not a currency as much. It's more like gold, like a store of value. So what's happening again right now? Not only in the US, but all over the place. People are struggling. Many people are unemployed. Businesses are closing. So the governments are stepping in and doing the right thing, which is helping folks so that the economy can rebound very quickly. But the flip side of the coin is, when you help too much, you put a lot of money in circulation. Now we have inflation problems, which means the money you have right now will be much less valuable 1 year from now or a few months from now because of inflation. So there are many folks now concerned about inflation, and they're moving towards other assets so that it protects their money. Now, which assets has no central authority printing money? Which asset has a limited supply and fixed supply? That's Bitcoin. So you can take your money and protect your money by moving it to Bitcoin. And that explains why Bitcoin, the price, is going over the roof now, because many folks are concerned about our 1.5 or 2 or $3.5 trillion infrastructure plan, because the inflation is up. If we spend more and more on infrastructure, inflation will continue to go up, and you have to protect your money somehow. Some people are looking at Bitcoin as a possibility. Flip side of the coin, volatility. I'm going to show you in a second how Bitcoin can go up or down like 10%, 5%, 7%, like in 1 day. The volatility here is horrendous. If the volatility is really high, how can we accept that Bitcoin is a store of value when that value can actually change very quickly, quicker than the inflation actually? Last one, let's talk about the evil one. That's the last one of today. Illegal activities. I cannot really stop here not saying about the evil stuff. Bitcoin is the semi-official currency for illegal activities today. A few cases, I believe you have seen that all over the news. You know, GBS paid $11 million in Bitcoin after a hacking attack. Colonial Pipeline, $5 million in Bitcoin after a cyber attack. So why do these criminals use Bitcoin? It's anonymous. Nobody knows who they are. Point number 2, if you look at these attacks here, just by accidents, by coincidence, they came from Russia. So you see how money can cross border really easily with Bitcoin? Again, I don't need information about you. I just need this address, this ID to send you money, no matter where you are. We can cross border very quickly. Flip side of the coin. Just remember, the ledger, the information about transactions is public. So that's why I joke often that the FBI loves Bitcoin. Because if you look at these hackers here, if they get Bitcoins, I can follow the money now because all these transactions are public. Eventually, they will make a mistake. Eventually, they will go to Starbucks and try to use that money. And now I can see a picture of them. Eventually, they will go to an exchange and try to exchange that money. Now I will know who they are. They will make a mistake with that money eventually. And I can see all the movements of money in my ledger. So just to give you an example, out of this $5 million that I mentioned before, 2.3 million was recovered by law enforcement in the US, just by tracking the movement of money inside this public ledger. All right? So there is a question here, how do we protect Bitcoin from loss or theft? My notes seem a little untrustworthy. Well, there are some techniques or different ways we can protect our Bitcoins. One of them is based on how we store something called private key. There's hot storage, cold storage, a bunch of technical definitions here. But in a nutshell, what I personally do is whenever I want to send Bitcoins to someone, receive Bitcoins, whatever it is, I need something called private key or a password. Think about the password. My password or my private key is never in my computer. It's in a USB stick. So whenever I want to have the transaction, put the USB stick here in my computer, perform the transaction. When it's done, take it out. So nobody will be able to actually hack or send Bitcoins to each other without my USB stick. On the other hand, if I lose my USB stick, I'm doomed because I lose all my cryptocurrencies. So I keep that close to me pretty much all the time. All right, so now I'm going to very quickly, and I apologize, I'm running out of time now. I'm going to do this very quickly. How can I buy Bitcoin? So if you want to have some exposure, not only to Bitcoin or cryptocurrencies, you can actually invest like 10 bucks, 15 bucks, 5 bucks, as low as actually $2. You can buy fractions of these cryptocurrencies. The different ways here of acquiring Bitcoin, number one, you can have your own mining machines, your own nodes. As I mentioned before, that's very expensive. It requires powerful computers. Second one, like in El Salvador, people can send you Bitcoins. Again, anyone can get one ID in the Bitcoin network for free. Number three, that is what I'm going to show next. You can go to exchanges. You can go to companies like Coinbase, Robinhood, PayPal, give them some dollars, and they will give you Bitcoins. Okay, so that's what I'm going to mention very soon, and forget about anonymity. Because as soon as you ask them to exchange money, they will ask information about who you are, because they comply with KYC. Last one, you can buy stocks of companies that invest in Bitcoin to get some indirect exposure. So there's this company, very interesting stuff, called MicroStrategy. They purchased 114,000 plus Bitcoins. Why? Because other people who want to get some exposure to Bitcoin, they can buy stocks of this company. So indirectly, they own a little bit of Bitcoins by buying stocks. But let's go to Coinbase now. Okay? If you want to follow the steps here that I have in my slides, you would go to coinbase.com, and heads up, I have no stocks. I know no one at Coinbase. Please don't take this as some sort of advertisement because it is not. The reason why I'm talking about Coinbase is, number one, it is an American company. Number two, it is a public company, very serious company. It's valued at 80 or 79, $80 billion. So it's a massive, huge company, very serious one. That's the only reason why I mentioned Coinbase today. If you go to coinbase.com, if you ask to sign up, the first screen that comes next is, who are you? Like, what's your name? Social security number. Where do you live? Why? It says on top here, financial regulations require us to verify who you are. KYC. As soon as you use Coinbase to exchange dollars for Bitcoins, forget about anonymity. They know who you are. Once you do that, let me show you a screen now. Let me close my slides and bring my browser here. If you just give me a second. I'm trying to hide here my assets so that you cannot see how much money I have. I don't have a lot, to be honest. Now, once you log in on Coinbase, if you go to assets right here, you can see the amount of money I have in different cryptocurrencies. But what I want to show is trade. How can we buy Bitcoin using the centralized exchange? You can literally select any of the cryptocurrencies. Look at the number of them right now. Bitcoin is only one out of thousands of them, and you can buy hundreds of them on Coinbase. So I'm going to go all the way up to Bitcoin, the first one. How can I buy? That's how easy it is. Click on buy. You can see how I have information about my bank account here. You can just click here and put information about your bank. How much money do you want to spend? Let's put $10 here. Let's see what happens now. With $10, if I preview my purchase, it says you can buy 0.0001, almost nothing, like 0.00015 Bitcoins. Now, from this $10, Coinbase charged me this crazy fee of 99 cents. It's like 10% of the money. But as soon as you increase the purchase, the Coinbase fee increases as well, but proportionally, it's going to be like 5%. But Coinbase is very famous for charging hefty fees. But that's how easy it is. You're done. If you want to sell now, go to the Sell tab, select the amount of money. I have 0 in Bitcoins, but you select the amount of Bitcoins you want to sell, translate that to cash, sell Bitcoin. That's how you cash out. If you want to send or receive, you can see this next tab right now. Send, receive Bitcoins. If I want to receive, what would I give you? My address. Remember the ID I mentioned before? That's my ID. Anyone with that ID can send money to me. How do I send to you? Give me your ID, put your ID right here, select the amount of money, and send. You can see how all the crazy stuff I mentioned today, that's happening behind the scenes. We don't actually see. For the end user, it's this fluffy, nice interface. I'm going to finish my presentation today by talking about volatility. Look at Bitcoin price over time. Right now, it's not too bad. In one day, it dropped like 0.01%. Not too bad, but you can see how it starts changing very quickly. Right there. 1 week, 6%. I mean, think about your stocks or pension plan going up 6% in a week. 1 month, 27%. Think about, again, your stocks, pension plan, whatever it is, going up 27% in 1 month. Now, take a deep breath. 1 year, 400%. Now, take an even deeper breath. All the time, a few years ago, it was like $100. Now, you can see how some people became billionaires by buying Bitcoins like 8-7 years ago. Right now, this 130 is, 57,000. But you can see the fluctuation here. So again, it goes up and down, crashes up and down. So it's not really for the risk averse. If you don't accept risk as much and volatility, it's hard to deal with cryptocurrencies. It's really insane how things go up and down. So that's pretty much what I have to say. We have some good chunk of time to discuss whatever you want to discuss now. I'm just putting my information here. Feel absolutely free to stay in touch. If you want to discuss some things, send me an email. I'm active on LinkedIn as well. I am not that active on Twitter, but I'm trying to be more. But to be honest, I don't find it too fun. But yeah, that's the information about my Twitter here. feel absolutely free to connect with me. And again, thank you so much, Wendy, for the invitation. All right, so there are some interesting questions here. I'm going to pick up some questions in the chat, Wendy, if that's fine.
Yeah, go ahead.
Okay, so the first interesting question actually came from you. What about reporting earnings to the IRS? Oh, that's a fantastic question. Okay, so if I have a node and I'm mining stuff and I have my own Bitcoins, so technically speaking, the IRS does not really know who I am. Okay, so it's going to be very challenging for them to actually go after me and say, hey, that's how much money you own now. You have to pay back to me. Now, I buy my stuff from Coinbase. Okay, for example, when I buy from Coinbase, that's for a taxation purposes, that's property. So what happens now is my Bitcoins can go up and down. Let's say I purchase 100 and it goes up to 200. I pay no taxes now. It goes up to 1,000, no taxes. As soon as I take that Bitcoin and translate back to dollar, now I pay taxes because I have appreciation of value and I have to pay on that appreciation over the years. So while I have Bitcoin, if I leave it there, I don't have to pay taxes. As soon as I get it back in dollars, now I have to. And it's treated as property and we look at depreciation over time and pay taxes on gains. Does that make sense? Yeah, but that's very interesting. So that's a related question from Dave. Yeah, are we required to report crypto transaction and holdings? That's a fantastic question again. We have mixed kind of reactions, if you will, from the IRS. So I know that some people in the field are getting letters from the IRS, like you have to report transactions or you have to report gains. We know that you have Bitcoin transactions going on. So what I did this year, they have one specific question there. Do you have cryptocurrencies? Did you purchase cryptocurrencies in 2020, whatever it is? Yes, done. They never asked me anything else. They never asked me about realized gains. They asked them nothing. So they never asked me about the transactions I had. They only asked, do you have transactions? Did you buy or sell cryptocurrencies? Completely honest, yes, done. So again, the regulations are lagging behind big time, big time. And that's a problem because, you know, the industry is flying. The industry is driving like 1,000 miles per hour. Regulations are like 5 miles per hour, you know, and that's killing the industry to a certain degree. And we can see people moving from the US to Switzerland, to Hong Kong, other places that are much smaller in size, and they can be more, let's say, can be quicker in terms of regulations, as opposed to a massive country like the US with so many different problems and issues. But I hope I gave you an answer to that question.
Do you have any other questions? It's a lot of information to take in.
It is. It's a lot. It's a field. And to be honest right now, I'm talking about Bitcoin. Bitcoin is kind of old in this field. We have the new stuff, a bunch of letters there, like NFTs, DeFi, tokens. We have so many crazy concepts now in this field. So many, it's sometimes really exciting stuff. Again, Bitcoin to a certain degree is getting old now because it was the first one, and new ideas, new propositions, new financial instruments are popping up pretty much on a weekly basis here. So it's a fascinating field, but you cannot really blink. It's like because there are so many things coming up pretty much every single week. So are Bitcoin to Bitcoin transactions considered taxable? Again, please don't take that as advice, as financial advice or tax advice. As far as I can tell, no, they're not really considered taxable. Again, but if I send you Bitcoin, if you have appreciation over time, it's going to be taxable. If that's going to change, chances are it will. So everybody in the field is looking at our government now. Our feelings right now, our feeling is that the Biden government is not that much open to cryptocurrencies. There have been some regulations that people complained a big time. So I believe it's going to be a matter of time until we get like taxations, like Bitcoin to Bitcoin transactions will be taxed somehow. The only problem is, how do you enforce that? Because remember, we have this anonymity in the network. How do you find these people? It's pretty much impossible. But yes, we are holding our breath now and just waiting for the regulations to come. And everybody wants actually regulations. It's not that people in the field don't want to, they actually want regulations so that we can understand what we can and cannot do, what's allowed and not allowed, without the risk of getting fined or going to jail, you know.
Yeah. Other questions?
Thank you, Dave.
Yeah, I think this is really interesting, and it will be. I'll be curious to see how these regulations develop. Not that I will ever get into Bitcoin, but I'll be curious to see. Well, if there aren't any other questions, we really appreciate you making the time to give us this presentation. I thought it was really informative. I've learned a ton. I hope everybody else has. And
I've enjoyed it very much. Thank you. You did a great job, because I knew very little. My son is trying to explain it, and he was as happy as he could be to know that I was going to be listening to you tonight. So thank you.
That's fantastic. I'm so glad you're here. And again, if anyone has more questions or want to discuss, connect offline, please feel free to do so. Wendy has my email. My first and last name, my last name is actually quite peculiar. So not many people with that last name out there. If you search me on Google, you will find me on LinkedIn, Twitter, and so on. Feel absolutely free to connect.
Well, thank you for being here from Oxford. We really appreciate it. This is one of the benefits of, I'm not going to say benefit of COVID, but it's a benefit of Zoom.
Yes, technology.
So, yes, yeah. So
Fantastic.
thank you everyone for coming. We appreciate it, and have a great evening.
Thank you, everybody. Have a great evening.
Thank you.